One low-cap Solana meme coin has just threatened Hyperliquid's whole business model, and crypto whales are heavily buying these two altcoins. This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody, and if you're new here, make sure to like, subscribe, and turn on notifications so you know when I drop latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, not financial advice, and wish the best of luck in your crypto ventures. Alright guys, welcome back. So Bitcoin is more or less doing the same thing. Not much to talk about right here, but I do think it's pretty much going the same direction. I think we're just going to kind of make these lower highs as we grind up towards $91,000 to $92,000. So not much of an update from yesterday. So let's get started with the news. We have Eleanor Tourette saying, the SEC Crypto Task Force has announced 4 more industry roundtables to discuss digital asset regulation. Here's the schedule. On April 11th, we're between a block and a hard place, tailoring regulation for crypto trading. On the 25th, we have Know Your Custodian, the key considerations for crypto custody. On May 12th, we have tokenization, moving assets on chain where TradFi and DeFi meet. And on June 2nd, we have DeFi and the American spirit. So more crypto roundtables, potentially more catalysts, more things to trade around, more things that could be happening over the course of the next month. We also have Cointelegraph saying, crypto czar David Sachs explains why the U.S. needs a strategic Bitcoin reserve. He said this.
The reason why we need a Bitcoin reserve is that the federal government already owns some. In fact, it obtained around 400,000 Bitcoin over the past decade through criminal and civil forfeitures and seizures. And so the government has to have a strategy for how it deals with this. In the past, the strategy has been simply to sell it, in an ad hoc way, almost willy-nilly. And that cost American taxpayers something like $17 billion in lost value. So we want to have a long-term strategy to maximize the value of these holdings. And we've decided that Bitcoin is scarce, it's valuable, and that it's strategic for the United States to hold on to this as a long-term reserve asset. So that's the plan with the 200,000 Bitcoin that we believe are in the possession of the federal government. And I say we believe because no one really knows for sure because we never had a proper audit. So that's one of the first things that this executive order provides, that we're going to do a full government-wide audit to find out what digital assets we actually have so they can be safeguarded and moved into a strategy that maximizes their long-term value.
CoinEx is one of the best exchanges you haven't heard of. Like Gate.io or Mexi, they offer a lot of coins, but more importantly, they offer the high-quality coins you want. CoinEx is a crypto-to-crypto centralized exchange, but they partner with firms like Simplex, Banksa, and MoonPay for you to move up to 60 different currencies to the exchange with an on-ramp. In fact, over 1,020 coins and over 1,500 different markets are available, so that's a lot of access. And one of the best coins it offers is its own native set token. It's up 63% in the last 12 months, and that's including the brutal last 30 days we've had in the market. You can also earn some set tokens in CoinEx's current contract trading challenge, going on until April 7th. SET also has one of the most active burn programs of all exchanges and exchange tokens. It's one of the reasons that people like BNB as well. CoinEx has a unique strategy where they take 20% of the trading fee income they earn and buy back SET tokens with it. And then they burn that same amount of the token they bought. So that means they're burning a lot of tokens. Now to the trading competition. All it takes is trading $1,000 worth to get started and to qualify. Trade in futures contracts in the specified markets and get in the rankings based on your profits. Anyone trading at least $1,000 worth in futures contracts is eligible for part of a 100,000 set prize pool. And as you can see from its returns and aggressive burn program, that sets a nice token to earn as a prize for trading that you're already doing. So click the link below to sign up for your account at CoinEx and start trading so you can earn some prizes. And then moving on, one of the bigger stories of the day, and this happened yesterday overnight. This is Hyperliquid and a Solana low-cap meme coin. So we have a good thread here. So a trader just pulled off the most galaxy brain DeFi play of 2024, although it's 2025, forcing Hyperliquid to choose between a $12 million loss or revealing their centralized controls. The outcome, pure chaos. Here's how this 200 IQ move went down. So the 4D chess setup, this trader had a spot long plus a $6 million perp short on Jelly and the Jelly token. Their target was a tiny $20 million market cap token. The strategy was to force liquidate their own short position. The goal was to make Hyperliquid inherit a toxic position. Pure evil genius. So what happened next was absolute madness. A trader pumped the spot price hard, and they get liquidated intentionally with their own perp position. So they had a short on Hyperliquid, and then they pumped the price with spot on chain. So Jelly explodes 429% in 1 hour. It goes from a $20 million market cap to a $50 million plus market cap. Hyperliquid then is bleeding millions. So here's where it gets spicy. The trader knew Hyperliquid's HLP would be forced to take over the short position, keep it open and bleed funding, and eventually face liquidation. This wasn't a trade, it was financial warfare. The potential damage was astronomical. The initial position was a $6 million short, and the paper losses were $12 million and climbing. The nuclear scenario, if Jelly Jelly hit around 15 cents, then Hyperliquid's entire $230 million vault will be completely wiped. This is what peak financial engineering looks like. So HLP is Hyperliquid's liquidity provider vault, and so that has $230 million. And if Jelly Jelly hit this price of 15 cents, the entire vault will be liquidated, and that's exactly what they did not want. But then Hyperliquid pulled their trump card. They liquidated $392 million of Jelly at $3.27 million at 0.0095. They actually made a $703,000 profit. They forced the delisting of Jelly entirely, and the market price at the time was 50 cents. The ultimate, I'm taking my vault and going home and making money move. So essentially, Hyperliquid, they showed that they were a more centralized exchange than decentralized, because what they did was they forced the price of Jelly to close at this price, which is way less than the actual price, which was 50 cents. So essentially saying, hey, we're going to use the Oracle data of this price, so we actually don't lose any money. We actually kind of lose. We actually make $703,000. They delist the entire Jelly Jelly, and then they say anyone who's in a trade at the time, we're actually going to repay you, so it's fine. So some people who are all about decentralization had a problem with this, and it showed their centralized controls of how they're actually able to roll back time kind of thing. So a lot of people are kind of angry about this. But yeah, the trade exposed everything wrong with decentralized protocols. No real size limits on illiquid assets, weak Oracle manipulation protection, decentralized until things go wrong, that's what I was saying, and emergency powers always ready. The trader's genius was targeting these exact weaknesses: a small cap token, automated liquidations, forced position inheritance, no circuit breakers. They found every crack in the system. This is why I love DeFi. Where else can you watch a trader turn market mechanics into a weapon and force a protocol to either take a $12 million loss or show its centralized hand? So that was a Hyperliquid drama yesterday. This is the Jelly Jelly token. We have to kind of go to a smaller time frame to see really what happened on the 15-minute. This all happened within a matter of about an hour. You can see the price here pumped like crazy. It went from, this is probably the short opening down here. You can see it pumped from this price all the way up here, about 476% within 45 minutes. It pumped like crazy. Then it sold off, pumped again even higher, and then came all the way back down after the position had been fully closed out. Binance and OKX also opened up perp trading for Jelly Jelly at the exact same time. So there's a whole debate about whether they're trying to destroy Hyperliquid, which is their competition, at the same time. So there's a whole debate going online. Whatever you think about, centralized versus decentralized exchanges. That was quite a show to watch last night in real time as this was happening. So that's Jelly Jelly. I definitely don't recommend buying this right now. This is just a complete gamble. I don't know what's going to happen with this. You can see this is a normal trading volume of Jelly Jelly. And, this was what happened afterwards. So you got to be careful with these smaller cap, on-chain coins, especially once they get perp listings on exchanges. So that was Jelly Jelly. Then moving on, we have Walrus Protocol. The time is now. Walrus's mainnet is now officially live. Now, if you remember recently, Walrus Protocol raised $140 million, and they did it in a tough market environment. They raised from A16Z crypto. I almost said AI16Z. That's how much it's been popular. AI16Z crypto, A16Z crypto, Electric Capital, Credit Coin, Levana Capital, Protagonist, Franklin Templeton Digital Assets, which is huge, Caritage, RW3 Ventures, Comma 3 Ventures, and Raptor Group. So huge people invested into this round for $140 million raise. And Miston Labs is also the team behind Sui, which is also the team behind Walrus Protocol. So a second time founding team. They did so well with Sui, and now they're launching Walrus Protocol. So only good things to come. And after a successful testnet phase, the big day for mainnet is nearing. This allows for new possibilities in digital storage options. For instance, Walrus is decentralized. This means that there's no central entity that can delete your files like Google. The Sui network established itself as a fast, secure, and low-cost platform, and Walrus has the same features. This makes Walrus faster and cheaper than what's currently available. In the blockchain space, Filecoin and Arweave are its competitors. However, Walrus Protocol has various advantages besides being faster and cheaper. For example, storage size and duration are also better on Walrus. So when paying for storage data on Walrus, you need to pay with the Wall token. This secures a constant demand for the Wall token, and in addition, it offers a payment system that keeps the storage cost stable in fiat terms. As a result, it protects you against the Wall token fluctuation in the long-term price action. You can also stake the Wall token. This secures the platform, and you can delegate your Wall tokens in due time to Walrus node holders. The Walrus token is also used for governance. However, this governance lies with the node holders. A good feature is that the wall token is deflationary. It'll not only have one, but two burn mechanisms. This sounds really promising and is something that we like to see in the tokenomics of a project. The first official listing for the wall token is on Mexi, and it mentions that spot trading goes live on March 27th, which is today. So that's Walrus and their mainnet, which is now live, and you can also check them out, link down below. And then moving on to altcoins that whales are accumulating, we have Alley Chart saying, whales have accumulated 2.29 million Chainlink in the last 10 days. So whales are accumulating a lot of Link. And we also have Sergey Nazarov, the co-founder of Chainlink, and he said this: Chainlink just confirmed they're working on a bill with lawmakers called the Proof of Bill, requiring stablecoins and real-world assets to have proof of reserves. It will literally be the law to use Link. I don't know about that, but Chainlink's gonna, benefit from this greatly. So Sergey said this:
the proof of bill that we're working on with a number of other legislators and their staff and other groups here in DC is really focused on proving that the real world assets that are backing a coin, whether it's a stable coin, whether it's a tokenized fund, whatever the coin is about, that those assets actually exist. And that proof about them existing doesn't happen on an annual audit basis, doesn't happen on a monthly report basis in the form of a PDF that, is very unclear. It's not very clear how anything was verified. But it happens on a second-by-second basis, so it happens in near real time. And beyond happening in near real time, you can drill down into the details of the underlying asset. So you wouldn't just know that it's treasuries. You would know that it's treasuries. You would know that it's 2-year or 5-year or 10-year treasuries. You would know the yield on the treasury tranches. You might even know the custodian with which those treasuries are held.
So that's very bullish for Chainlink as well. And Chainlink is hovering around this $15 range, kind of in the middle. Nothing we want to do just yet. If we do come back down here, reclaim this level around, 14.5 cents, it could be a good buy to pick up because that's a nice level reclaim when we start to make higher lows. But likewise, I really do want to see us get past this strong resistance here between 17 and around $19.5. If we can reclaim this, I'll be super interested because we'll now be heading towards not new all-time highs, but highs for these past couple months. So this is going to be a strong barrier right here. I do expect us to come up and probably reject at $17.5 at some point, but then hopefully break through sometime soon. So that's Chainlink and kind of what I'm looking for right now. Nothing to do just yet with Chainlink. Then lastly, we have Look on Chain saying whales are accumulating ETH. This newly created wallet withdrew 7,100 ETH worth $14.27 million from Gemini 4 hours ago. Another wallet withdrew 4,709 ETH worth $9.47 million from Binance 8 hours ago. And then deposited to Aave, then borrowed 8 million USDT from Aave and deposited to Binance, possibly buying more ETH. This other whale drew $5.44 million from OKX 9 hours ago, and another whale withdrew $2.86 million from Kraken 3 hours ago. So whales are accumulating a lot of ETH. And lastly, he says, we just survived the worst Q1 in Ethereum history. We deserve the best Q2 ever now. And I do kind of agree with him on this point. We've had the worst Q1 in history, and supposedly after Bitcoin's halving year, the first quarter of the next year is supposed to be the most bullish for Bitcoin, for Ethereum, for altcoins, and we've just had the worst quarter in history. So I do think we will have a better Q2. I'm not sure if this is going to be the blow off top quarter, but I do think we had higher this quarter, so I do think it'll be a bit more bullish. It's hard to be worse than the last quarter, so I do think we will be more bullish. And so for Ethereum, we are hovering around $2,000. We're starting to make higher lows here, so that is good, but we are kind of like Chainlink in the middle here. I do want to see us reclaim this level at around $2,250. If we can reclaim this level, we'll be back into this multi-month range here. I do want to see us get above here because the more likely outcome, unfortunately right now, is that we come up here and we reject from this level as an underside retest and we come back down here. So if you want to accumulate ETH, you probably want to accumulate down here around 1,600 if we do make it that low, or you want to see a confirmation that there is actually strength in Ethereum and we have reclaimed this level and we are heading back to new highs. So you either probably want to buy it down here or you want to wait till there's actually strength and it's going to go higher and buy a little bit higher around here because right now we're just kind of hovering in no man's land. So that's Ethereum right now. Nothing changed too much, but whales are continuing to buy, which is a good news for Chainlink and Ethereum as well. And same with Bitcoin, just kind of hovering right here. I think it's going to be a slow day as we go into the weekend. We start to slow down. Maybe we grind up higher New York Open, but I think with Trump's Liberation Day next week, I think we're going to kind of stall as we wait for things to happen and the whole tariff news to come out. So that's the video for today, guys. I hope you enjoyed, and I'll see you guys tomorrow.